Hi guys, my name is Likit Sagar. Welcome to the weekly review of US natural gas. Please note that this content is for informational and educational purposes only, and I'm sharing my personal execution and trading logic from the past week. I do not offer financial advice, trade recommendations, or future market outlooks. Commodity trading carries a high level of risk, so please take please do your research accordingly and then take positions if you need to. Okay, this is the regular disclaimer, probably moving on to the US markets and how they moved over the last week. Firstly, I'll be uh, going through the fundamentals and parallelly the charts, and then at the end I'll let you know how I traded the US gas over the last week, what went wrong and what went right. Okay, let's move on to the charts themselves. So if you look at on TradingView, this is the trading view for natural gas. So this is the US natural gas traded on Indian exchange, MCX exchange. So the US gas probably is traded in dollars per MMBTU, but here we trade it in INR, which is Indian rupee per MMBTU. So you just multiply the dollars with INR conversion and then you get this chart. So this is how I trade my ideas in on MCX. So let's move on to the June contract. So on 28th of April, the the rollover happened from April to May. So however, this one is for purchasing June contract. So June gas is purchased in May, and as you can see from the chart, so from the start of the contract it fell slightly, and then from then the market was moving higher. So on Thursday, I'll explain the significance of Thursday in a bit, but Thursday is when EIA reports weekly inventories. So Thursday happens to be the volatile day. So on the first Thursday when on April, the market moved higher until Monday, and then there was a sharp reversal um to almost where it was, and then on Thursday again there was inventory report, and then market moved higher again, and then again there was pullback on Tuesday and a bit on Wednesday, and however Thursday as well. If you look at the bottom week, so market was clearly about to fall. However, the report came in line with the market expectation of 85 BCM, and then market rallied significantly on Thursday and Friday, and then market opened higher on Monday as well, and then Tuesday and Wednesday happened to be probably the highest in few years. The temperatures were highest in few years in Washington DC. So the power consumption, so gas for power, as power consumption was higher, so gas for power factor was high. So market was highly bullish on Tuesday. I'll just show you the chart where you can see the Washington weather. So you can see the Washington weather. So this one is the May 2026 Washington DC chart. So on May 2026, so May 26, this is the current month. As you can see on the 19th, it hit 36 degrees Celsius. So that's a record probably for a May this early. So market currently was so bullish, and then it has gone significantly higher, like 2.3% on a day on Tuesday. However, on the next day, when the market realized that the weather is not going to sustain so high for longer, there was a quick reversal of all the gains, and then on Thursday the report has come from EIA, which clearly showed that a triple digit increase in the storages. So that has put a brakes on the market, rally, and then yesterday probably market recalibrated again, and then it realized that probably in the few coming weeks as well, as you can see on this chart, this one is the easy medium weather outlooks. So for the next few, this one is the May week starting 25 May. So the week starting 25 May is probably gonna be uh, much cooler than this week, and then the week after could be cooler as well, moving into June. Below seasonal weathers across Texas and the eastern US, which happens to be the highest consuming gas region, so eastern and the south central region. So probably we could expect uh, I'm not sure, but probably we could expect higher inventories, significantly higher storage additions. So this one is the report on last Thursday. As you can clearly see, there was 101 BCF storage additions. So this was significantly higher than market expectations of 96 BCF. So probably this one is the median consensus, which was 96 BCF for week ending. Um, uh, this report was released on Thursday this week, 21st May. But this report points to the week ending 15th May. So probably market was thinking 96 BCF, but it surpassed the expectations. Probably because of higher has sustained higher production levels than last year, and then we have also got uh, probably probably nice storage injections across south central. Could be because of increased renewable generation and then reduced dependency on gas probably. So that has increased that helped south central region increase its storages by 31 BCF. That has helped probably. And then this is with regards to fundamentals. Now moving on to the technicals, let's see how patterns have emerged. Coming to the technical analysis now, uh, clearly, like, fundamentals are the ones which move the market, but technicals are the one which help us to visualize and help us to trade the markets. So probably, as you can see, the trend was clearly bullish from the start of May, 30th April and then till 15th of May. And I haven't entered the market uh, till probably uh, 11th of May. I was just watching the market. So I am aware that there is uh, El El Nino weather patterns. So probably there could be higher than above seasonal average temperatures this summer. So which again means there could be higher gas for power consumption in the United States. So I am aware of that. But what clearly surprised me was this move on Monday, so which is like 6% higher, which immediately changed my sentiment to bullish. So probably I entered the market here on a bullish way on Tuesday, but uh, uh, I'm just starting small, so consider just one lot. And then I enter the market here, and probably I would have seen the market gone till 281. So I was in good, maybe some far off it, but quickly market reversed on Tuesday and gave away 2.4% of gains. However, I'm still not convinced that this could be a reversal, but my position probably my position I was not in a position to take another future. So I purchased some call options here on Wednesday. uh, Probably at some point when market was again retracing back. So I kept the positions, but then I was still worried when the report was gonna come, because market was bearish. And then, however, the market report, it came on as per expectations of 85 BCF, but market shot up. And then that proved to me that the market is bullish. And then I held on to my options. And then uh, by the end of by the end of Friday, market moved significantly higher. At that point I closed my positions because I didn't want to carry the risk of carrying my positions into the next week. So the for the week starting 11th May, probably I made maybe a, maybe 1,000 rupees, which is in like um which is maybe 10 pounds. I mean, you can analysis, but yeah, I was able to recover my losses which I incurred from Tuesday's fall, simply because I traded with the markets. So I was able to make some profit, and then I was able to sustain as well, close my positions. But coming to Monday, I had the view that I had a view that I have already plotted this. By the time I have already plotted this rising wedge pattern, which usually means markets gonna fall. Like rising wedges are bearish. That's the technical analysis book, typical book concept. So I was of the view that market could fall, but market opened higher. Immediately I had already recovered my losses, so I can take a future now. So I took a short position here, probably around 290 levels, when the market opened. But what immediately happened was market continued to go high, and then at that point I was very much convinced, probably at 297 levels, that I was that the market couldn't go higher than this, because I had this trend line plotted long before. I was convinced based on fundamentals that this is clearly significantly high. So I went and sold some options, 300 at 296. When the price was 296, I sold 300 put options, and then clearly I was in profit because market quickly pulled back. But on the next day, market shot up again. I was scrambling for answers to see why the market has shot up to 300, and I was literally seeing, what did I is this line gonna is this line gonna be is this broken decisively, or is this line gonna sustain? I just want to hold. I did my analysis, and I found that probably it is because of the higher temperatures in the Washington DC, which would have pulled the public participation and then pulled the markets higher. So it's just the speculation money, and probably on just one that day, probably markets would there would have been news, probably in all the news outlets, that this is the highest we have seen over the years in Washington DC, and there is higher gas for power demand, and then market has pulled. So I was typically convinced that i could I could sustain. But with the options, probably they are going to expire by Friday, so I had to borrow and sell some more options, probably like another 50% more. I was able to manage, but then option price was lower as well, because market was were trading around 300. I was convinced the other day on Wednesday, and then I sold a few more options, and then the market crashed as expected, probably because from Thursday onwards, the weather is going to be cooler, and Washington DC was expecting rains over the evening of Wednesday itself. So market crashed, and then I was I recovered all my losses. So that's the good news. But again, moving on to the next day, Thursday, there was this anticipation of EIA report, but market was trading sideways, and then there were probably I'll just take the hourly charts and explain how I traded. So so this is the point where I was bearish. I sold a future, but I couldn't sustain the loss. I couldn't hold. My stop loss got triggered, so I had to close my future position. But I was very much convinced that this was uh, over 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 hyped. So I sold my options here, put options here, and then market fell. I was in profit, but I didn't book because I felt this could crash. But what happened was the market rallied till here, and then market was trying to fall again. Here probably at around 300, I have sold another put options, 300 put options, but market was falling. This was another pricing wedge pattern. I was clearly aware this couldn't hold, but then again on Wednesday tried to this looks like a false breakout. But at that point I was so nervous that to see, but I held my nerve and I held onto my analysis, and then market crashed. And then again I was on probably on Thursday, just few hours before, probably around 15:30 UK time, the report comes. So there was some speculation going on, but I was aware that the why the market was bullish over here is because of weather patterns. But clearly the next few weeks the weather is gonna be probably below seasonal or around seasonal. That again means the 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 logic behind this rally isn't there anymore. So I held on to my positions with some nervousness, but still then the next day market closed a bit lower, and then I was still waiting, and by around 14:30 hours I had to close my options uh, because or else I need to purchase all the options, because I had around maybe 7 lot of options. However, I do not have that much money to buy a future, so I had to close my positions here. But as you can see, like when I purchased my options around 300, so I had, when it was around here I purchased for around 11 rupees, so I would have been in profit when break even for 289, and below this all is profit. But when had purchased it for around 301, it was around 6 rupees, so my average around my average has come to around 9 rupees or so. So below 291 I will make profit for sure. So on Friday morning I was in profit, and then I held on to it. Uh, but but what kept me nervous is that there could be some pullback. This happens to be the typical head and shoulder pattern, as you can see on the line chart here. A shoulder, head, and a shoulder. So I was nervous about some pullback which could happen in a head and shoulders pattern, but so I had to liquidate few of my positions before before 2:30 to just to protect some profits. But I held on to other half. So by the end of 2:30 the price was clearly around 282.3, and probably I should say, like, it's just 2 weeks, and last week was just break even. This week I made around maybe around 50% profit of the total money I invested. So that was a good thing. um, yeah, like I said in the beginning, I do not want to share my outlook for next week. Probably by the end of next week I will just come up and make another video and tell you how I traded. What's the logic behind my analysis. Probably, as you can see, I didn't mention the currency factor as well. So this bullishness, in the bullishness there was currency factor as well. Indian currency was trading losing value, so this bullishness was higher than US gas. And then after Wednesday I held on to my view that probably currency could also help me, and because it was hitting all-time high, there was speculation in currency as well. And RBI did some moves which helped Indian currency to strengthen, that would have favored me as well. So I held on to my positions. Look at the risk. Maybe I made 50%, but the risk was I would lose maybe all of my maybe all or some, like I said, 289 was my break even. Probably if market has bounced back and settled in two sorry 291 was my break even. Probably market has settled around 295, then I would have lost maybe around 40%. So if you look at risk reward perspective, uh, maybe it's 50-50, 50% loss, 50% gain. But my analysis was right. That's the point I would like to make. And then I have made 50% profit this week. That probably concludes my video for this